Wealth Within, they gave me that feeling of trust.
What you learned in the course was just mind-blowing.
Amazing. It was phenomenal.
It opens your mind up and makes you realise you don't know what you don't know.
I've got the tools now, 100% worth it.
Definitely get educated.
Hello and welcome to Wealth Within's weekly hot stock tips. I'm Philip Tortevsky, Senior Analyst at Wealth Within, and we're Australia's most trusted stock market educators. Every Tuesday night, you can see me on the Australian Stock Market Show live on YouTube alongside two amazing professional traders, Janine Cox and Dale Gillum. In the show, we answer important questions around the stock market, cover lots of great stocks, and help you become a better trader. Today, we'll unveil what's hot and what's not for you, our viewers. But before we dive into this week's stocks, I am joined today by Wealth Within analyst and trader Pedro Banales. How are you, mate?
Ew, very good. Yourself?
Good. We're getting a bit of a rhythm back on again. Yes.
Yeah, I'm liking this. Yeah, this is good. I mean, we get to look at some nice stocks and chat a bit of trading, so I love it.
Fantastic. All right, so let's get straight into it. On your screen right now is the watch list of the top 200 ASX stocks. And I mean, as mentioned, obviously, Insignia Financial had a huge week last week, up 17 odd %. You can see that one's gapped on up, gone for a huge run. But as we go through the list, obviously, we've got Tabcorp Holdings up 6%. A few energy players coming through, Deep Yellow, Karoon, Yancoal, Paladin, which is quite nice. Beach Energy had a huge week last week as well. Up 4%, it says here, that's on the day. But if we go on the weekly settings, you can see there was a huge week through there.
Oh, that's looking nice, isn't it?
Very interesting at the moment. But it is dominated by, materials and energy plays at the moment, which is nice to see. We saw the tech sector fall a little last week, which was not surprising given the way that's run over the whole year. But yes, dominated mainly by miners and energy. So that's a space that you should be looking for opportunities at the moment. But flipping the script to the downside, we've got Ventia Services down 13%. And, apart from the top three, obviously there's not too much volatility in terms of what you want to see with these stocks, which is quite nice, even though the market had a pretty poor week last week. Yeah. It was down almost 2% in 1 week. But, we've got Life 360, not surprising. I mean, this stock's been absolutely on a tear. Yeah. We go on the monthly chart. It's going to come back at some point. Then we've got Zipco. That's also had a huge run, so that's weakening off a little. Domino's Pizza, Perpetual. A few medical players coming in through too, Pro Medicus, and obviously tech. WiseTech down. Healthcare as well. Ramsey falling off, and a bit of financial, which is not surprising. All the sectors that have been running, being tech, financial, that have had fantastic years to date, they are seeing some weakness, which is quite normal. Yeah,
and I do like the one that stands out to me is ANZ over here, down 6.48%. Now that was on that negative news that they received that lawsuit, and also with the change of CEO. So that one, from a medium to long-term perspective, I do like it. Look how much it's down on the daily chart there. But if we go to the weekly, it is still very much on an upward trend. So it's just gone back to that trend that we're seeing over here. So if we go to the COVID low, it's still well above that, and it's even got an accelerated trend there. So it could actually come back to around these levels, $27. But I do like this one moving forward.
All right, fantastic. So what is hot in the market this week? Well, on your screen right now is my hot stock tip for the week, Bega Cheese Limited, stock ticker code BGA. So on your screen are the monthly and weekly charts. Now, Pedro, I want to start things off on the monthly here with Bega because it's an interesting stock. And why I say it's interesting is because it's had an absolutely stellar run since October 2023 in a very strong, nice uptrend. And I've marked a few levels in black here. Now, these levels, to me, are the most important levels of support and resistance for this one. I guess, since 2010, you can see that the stock around $2.50 had found support back in 2013, and then again almost hit it smack bang on in October or August, September 2023. You know what I'm talking about? Yep. And then as we go up, $4 was another level where you can see the stock found huge support back in 2015, 2016, again in 2020. And then it acted as a bit of resistance back in 2022-23 for then the stock to find support again in August 24 from this level. Now we're approaching another very important level. You can see that, again, since 2014, resistance, support, resistance.
Oh, yeah.
Very important. The stock's gravitating towards this level. Well, what's also interesting about these three levels is that they're almost $1.50 apart.
Yeah, I noticed.
So the stock is moving quite cyclical in terms of price levels. It's got from $2.50 to $4, $4 to $5.50. So if you are looking from the medium to long-term perspective on this one, $5.50 to $7, that's probably where this stock's going to if it's going to repeat these price levels. So is there an opportunity in the long term? Absolutely. But at the same time, we've got to consider, although there is opportunity to those levels, we're at a level right now that is could be considered resistance.
Yes.
But why this stock is so bullish to me, if we go to the weekly chart, obviously it's been respecting this upward momentum line. That's for one. And when it does get going, you can see that it can run quite sharply.
Yeah.
So what I'm saying is, and even these runs through here as they've gone on, they are quite sharp. Don't be quick to be deterred by this stock just because it is rising sharply, because that's how it can get going. And rather than fall away at this resistance, what this one's done is it's consolidating sideways.
Yes.
And that is, I guess, a point in itself. I mean, this could end up being a period of distribution and the stock breakdown. Yeah. And, that will, I guess, indicate that there's a huge amount of selling come through there. And hey, we forget about it, we let it go.
Yeah.
But if this is, pent up energy on the buy side and we smash through that resistance level, then I think this stock is going to go for another nice run, just like it did back through here when it found a grants in price and then took off. Just like on the flip side to the down where we found a grants in price for then it to shoot on the way down. So the fact that volume is coming off, as the stock is kind of finding its feet through there, it's really setting itself up right now to me with one of those line in the sand moments. If we can take out these $5.50 levels strongly, break through that resistance, we've probably got about a 30% upside in it.
Oh yeah.
Medium to long term, if not more.
Yeah.
And you've got to factor in the market has been negative. I mean, the market was negative last week. Look what this did last week.
Yeah.
Rather than fall away, this one's holding up. So it is bucking that trend. But time will tell. We've got to get our head above $5.40 for the first, confirmation that we're going higher. If we start filtering and taking out these $5 lows with conviction, then it's a forget about it case for me.
Yeah, oh mate, I think you've covered it all there. Really. You've left me with nothing but excellent, technical analysis. And if we go back to the chart, I just wanted to also highlight. You mentioned that the volume is coming down there. And it actually did that as it was accumulating in this earlier period. The volume was coming down, and then it spiked up as it shot up into this next period of accumulation there. So we could be seeing something similar. Look out for volume spiking as it comes out of this pattern, and then we could be on the next run up. That could actually be the catalyst for it to break through. So I love it from a technical point, and fundamentally, I've had a look at this stock before, and they're doing great. Their financials look good. They're making more money. They're spread out in their financial modeling. So fundamental and technicals are aligning. So I do like it.
And if we just go back to the chart real quick, you just mentioned a really important point, and have a look on the breakout, because you always want to ask yourself, when price is moving, is it being supported? And have a look at those three volume bars.
Ooh,
huge volume coinciding with the buying.
Yes.
So that in itself is giving you an indication that, hey, there's some strong buys around these levels, up from that $4.60 up to $5. So a lot of things positive to be watching out on this stock, Bega Cheese. But anyway, that is it for my hot stock tip. Now we're moving on to a stock that should make you proceed with caution. Transurban Group stock, ticker code TCL. Now on your screen are the charts of TCL. Now, Pedro, I've marked a few levels here. Obviously, long term, the stock is stuck sideways.
Yeah.
That's, I guess, the first thing to consider. But range-bound stocks aren't always a negative, especially for those traders trading the range. And you can see two very distinct levels, $12.30 and $15.
Yeah.
It's at the bottom end of that range now, which is quite promising, because if you are looking to trade along, there is upside up to that $15. But it is a caution for me right now, because it is, on the weekly chart, although it's coming back to this momentum line through here, it's had a week where it's tried to get above it, show some strength. I mean, compare it to this level through here.
Oh, yeah.
Touch momentum, look at that really strong buying. And then we saw price never really take out that buying. We saw a bit of a touch of the momentum level through here. Initially, once the buyers tried to get involved, it got reversed.
Yeah.
Rejected, close on the low. Again, rejected, a third week in a row rejected. So we're not really trying to accept a high move up, even though we should probably get going from these levels. That's the only reason why it's a caution for me. It might give you that, as you rightfully said in our other show, CRAP price action at the moment. And fiddle around, not giving you any real strong buying. So for me, it's a caution. Could be continuing to go sideways, but definitely one to watch because you could get some trade through here.
Yeah, there could be a good short-term trade there as it reaches this bottom level here, as you mentioned, $12. How much percentage do we have up to that top of the range? So we've got 20%, but then if you factor in that, what's the risk here? So if it does fall below this level, where would you draw your line in the sand? Would you set your stop below this $6.50? But really the next support level is down here around these levels. So you're really risking, roughly around that 10% to 12%, really to make 20%. So I agree. I'd proceed with caution on this one. It's really done nothing since COVID. And this relies on toll roads for its revenue. And I know that they own some toll roads around the world. I believe they've got one in France and, they've got some here as well. But it's, it really relies on that commerce and businesses to run, right? The more cars and trucks that there are on the road, the more money that they're going to make.
And the higher the cost of living gets, the worse it gets. I think when people are presented with a choice, am I paying the $10, $20 for the freeway, or am I going to go the long way route? In tough times, they're going to go the long way route. So that could affect the bottom line there. But anyway, that is it for TCL. Now, lastly, what's not hot in the stock market this week? Well, Pexa Group stock ticker code PXA. So let's get into the charts right now. Now, one of the reasons why I wanted to bring this one up as well, because this one we liked a little while back, and I just wanted to show that, when trading or investing, what have you, you always need to be able to see things for what they are. Have no bias on when you're buying or selling a stock or analysing a stock, and be able to turn on a dime to identify, hey, you know what? Although I did like this stock at one point, now I don't like it at all, and it's probably time to get out. And that's what this example with Pexa was, because through these levels through here, Pexa looked interesting, had a bit of a run up, but then you saw it fail at $15. Tested 15 once, had a pullback, had a second go at 15, failed that, and you can see 15 is previous levels of resistance. Wasn't able to break above and close through the previous high through here as well. That's another warning sign. Then we get the break of the momentum that had been supporting all the way since January 2024. So we've broken to the downside of that. And if we look on the weekly chart, we've broken down, we've had a chance to show buyers find some reverse, bang, closed on the low, and last week it's continued on with selling. So I think we're taking this low out for sure. And there's no guarantee in trading, but Jesus, places you can get to it.
For sure,
but it doesn't look pretty because, it looks like we're changing momentum here. We've failed highs, we're changing momentum, and this could very well go all the way back down to those all-time lows again. So it's important to keep that in mind. What once is a good stock can very quickly turn into a not so good stock, and that's your job as a trader to identify it at the earliest possible moment, take the risk out of it if need be. And then find a better opportunity. But is there anything you're seeing as well on Pexa?
Yeah. So if we go back to the chart, and I do agree, you have to know, don't be afraid to be wrong. You are going to be wrong.
Well, it's not about being wrong. It's about
your analysis anyway.
It's about identifying, because you're working with a fixed point in time, and then when you don't know what happens tomorrow, when that changes, it's about being quick to adapt.
Yeah, of course.
That's the
if it does
that's
turn
the
against
skill.
You. Yeah, that's right. And having these lines on the chart allows you to have something that you can actually action against. So I don't like the fact that it's pointing down. This close it's closing on the low, and it could actually come back to fill this gap over here. You see that it's closed on the low here back in April and then gapped up. It could actually be coming back to fill that gap. It's quite likely that it is. So I think it's around these levels, around that $11 level. It could find some support. Could be one just to stick on the watch list and watch for a while. I know that they facilitate real estate transactions. They're the register to kind of transfer the titles from one name to the other. So I'm not sure how they can scale their business model up, whether they just rely on more houses being sold.
Well, that's probably what it is.
So fundamentally, it'd be quite interesting to explore it, but from a technical point, it looks horrible.
Yeah, absolutely. All right, well, that is it for Pexa Group, and thank you for watching this edition of Wealth Within's weekly hot stock tips. Now remember to tune into the live Australian stock market show on YouTube from 7 p.m. Eastern Time every Tuesday night. To find us, just type Wealth Within live in the YouTube search. And remember to have your phone ready to call in live to speak to us so we can answer your questions. The number is 03 9290 9988, or you can email into the show right now by sending your questions to info@wealthwithin.com.au. Now, if you want a copy of Dale's first book, you can still get it for free. You just have to pay the shipping. You can order it from our homepage, wealthwithin.com.au. And I hope you've enjoyed today's episode. And thank you very much, Pedro, for your excellent comments today, mate. And Merry Christmas. I mean, it's our last show for the year.
It is. Merry Christmas to you too. And I hope that you have a good break and much deserved, actually. So, and take this time to analyze your stock, guys. And keep tuned for the next year.
Yeah, it's been great having you on, and I'm sure we're going to have Pedro on as a regular next year as well. But anyway, to everyone watching, we do want to say from the whole team here at Wealth Within, Merry Christmas, have a happy new year. Thank you very much for your support and tuning in. We really, do appreciate it and keep supporting, because we're just going to keep sending you the best of what we've got. So thank you very much. And again, as I said, thanks to all of those who are watching. For now, goodbye, good luck, and good trading.